How's everybody doing today? Deck pulled down my old one and I had to put up a new one. I couldn't find the old picture. So it looks a little different, but it's me. So a lot of people don't know if I'm still here. I'm watching IONQ. I see he's going up and the SPY went back up. Finally bounced. Can you guys hear me okay? I just want to see if you can hear me. SMCY, what am I looking at? Come on. I need a new computer. This one's gotten so slow. You gotta take a lot of stuff out of it. Come on. IOQ, it's up 325 to $75. Even what's that? CoreWeave is down to $1.42 today. One of the stocks I watch. Palatar is up $1.87, I think. Let's see what comes up. $1.88. What else do we got here? Most actively traded. Let me just refresh this page, see what we got here. Tesla, NVIDIA, Tesla, Amazon, Apple, Oracle, Palatar, Microsoft, AMD. Those are your top stocks on the NASDAQ. We do have the Fed chair speaking 12:30 in a few minutes. So let's see. If anybody wants to watch that, let's see if I can get that open. Copy. Let's see. Here we go. That's not right. It's supposed to be the Fed chair. Fed chair Powell speaks any minute. Here we go. What to watch. Here we go. Live. Come on, open up. 6 minutes ago. He's minutes away. Alright, try Market Watch. I can't get anything to open. Come on. Must be a lot of people trying. Here we go. Let me see if I can get it to go. He's minutes away. Federal Chief Advisor Company Wall Street, all ears. Those are reads. It's not coming up. That'll do it. There we go. Hey, perfect timing. I need to get volume in here.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a quarter percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments.
Station identification.
Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending.
That's not good.
In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak.
Great.
In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of this slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate
There we go.
needed
Sorry
to
about
hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the market slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in
Do me a favor, if
2027.
you're new here, please subscribe, because
Our
I'll have to
monetary
start from
policy
scratch.
actions are guided
Jack
by
took my
our
old
dual
one out,
mandate
which I
to
had over
promote maximum
800
employment and
subscribers.
stable
He
prices
took it all out.
for the American people.
He had to reset the whole
At today's meeting,
trade
the
cast
committee
reset.
decided to lower the target range for the federal funds rate
So, if you get
by
a chance,
1/4
just
percentage point
resubscribe. I
to
need the
4
numbers.
to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having
Wow.
increased, the
You're
balance
not a-
of risks has
You're in
shifted.
Tradecaster. You should be able to
Accordingly, we
subscribe
judged
in
it appropriate at
Tradecaster.
this meeting to take another step toward a more neutral policy stance.
Huh.
With today's decision,
That means you
we
only
remain
subscribe
well
on
positioned
YouTube.
to respond in a timely way to potential economic developments. We will continue to determine the appropriate
see.
stance of monetary policy based on the
Lobbies.
incoming data, the evolving outlook, and the
Yeah,
balance
you only
of risks.
subscribe to YouTube. I need it in.
In our
You have to go to the
SEP,
lobby.
FOMC
In the lobby, open up
participants
another
wrote down
lobby,
their
and
individual
you'll see it in
assessments
the
of an
lobby.
appropriate path for
Yeah,
the
I'll
federal
put it up
funds
there for
rate,
you.
based
So it
on
opens
what
up
each
another one and you
participant
don't close
judges
this
to be the
one.
most likely scenario
Yeah.
for the economy.
Right there. Go to there
The
and go up
median
to me where it
participant
says
projects that the
subscribe
appropriate
and hit
level of the
subscribe.
federal funds rate will be 3.6% at the
I
end
appreciate
of this year,
It'll keep this open.
3.4% at the end of 2026, and 3.1%
Okay,
at the
great.
end of
Thank you.
2027.
Appreciate it.
This path is 1/4
Only shows
percentage
5.
point lower
You must have done
than
it before.
projected in June.
It only
As
shows
is always
5.
the case, these individual forecasts are subject to
Subscriber.
uncertainty, and they're not a committee plan.
Oh,
or
no, only
decision.
one subscribed. Wow.
Policy is not on a preset
Okay,
course.
maybe you're my first.
The Fed has been
Unbelievable. I gotta
assigned two
start all
goals
over.
for monetary policy: maximum
I
employment
had
and stable prices.
850 subscribers.
We remain committed to supporting maximum employment, bringing inflation
Which really
sustainably to our
sucks, and now
2%
people don't know
goal,
I'm
and
live.
keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to
Who
all
else is
Americans. We understand that our actions affect communities,
Fund
families, and
manager,
businesses
G-Right,
across
please
the
do
country.
me a favor.
Everything we
Resubscribe.
do is in service to our
Trade
public
Vic.
mission, and we at the Fed will
Trade
do
Vic,
everything we
everybody,
can
resubscribe.
to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Great. Thank you. Chris Rugaber, Associated Press. As you know, Fed Governor Stephen Byron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
You and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation?
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timrose of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that, but we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut
Bullshit.
today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, And you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
Colby Smith for the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago. The forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off, and that tells you that it's time to take that into account in our policy.
The SEP, once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low, still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cut address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
We can follow up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. Not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028 at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years. But the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that the effect, basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that, though, right? We have to. Our job is literally to make sure that that is what happens,
Made
and
a
we
quick
will
80
do
bucks.
that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, and this is quite an unusual situation, how do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal. So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
I knew I should have held it.
Concerned are you about the slowdown in the jobs market
Okay,
for
at
households at
320.
home, especially younger Americans struggling to
Contracts
land
at
a job?
340.
So it's an interesting labor
Maybe another
market.
80
and
bucks.
obviously, we think it's appropriate that we reduce our rates so that we
Now it's
become more
50.
neutral, which presumably will be better for the labor market.
I need to learn patience.
You see people who are sort of more at the margins, so kids coming out of college and younger people,
There it goes. There it
minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment, and the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. Let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking
I got out 60 cents
rather
too
than
short.
looking at this as
I didn't think it
certainty,
was gonna go that
I would
way.
encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes, and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you gotta be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that, but it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based on, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right there that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now. And people they're making their arguments, and we're having really a great discussion around these challenging issues. So,
do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount. And I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies, and how many go out of business, how many are founded, and it's just really hard. You can't survey for that. You've got to have a model that predicts that. And it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still well good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
For the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. It shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
You know, we have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So, as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. The black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter, and I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that. You know, you see minorities unemployment going up. You see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all this together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point
13 exponential
rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
Options.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low. But downside risks, but it's still a low unemployment rate. So that's how we see it.
Yeah, I don't think Trump sees it the same way you do.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an
Trump derangement syndrome.
Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
Of course, I'm not going to comment on anything the Secretary says, or really any officer says.
Who wants to see him leave in
So
May?
in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work
If
going
you're not a
on
member
behind the
or
scenes
active trader,
around
we had to start a new brand new
the
streamer.
assets we have in the
Please
Federal
subscribe.
Reserve Bank
Just
system,
go into
Federal
the
Reserve
lobby.
system, and
You
at
won't
the
lose your
board.
place in here, and just
Are they
hit
the
the
right
lobby
size? We're
above
actually going through a 10%
and just check subscribe. I appreciate it.
headcount
See if I can build my
reduction
numbers up again.
through the whole Fed.
I had over
including the board and
850
all the
and Beck
reserve
took it
banks.
down.
The
He had no
employment at
choice.
the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero
It's your way of telling
job
me you want
growth
me to
for
come
more
back.
than a decade when we're finished with that, and I think we'll probably do more than
And
that.
when I
So
do go live,
I think
it'll
we're,
send out
we're
a thing that
certainly
you'll see
open
it.
to constructive criticism and ways to do our jobs better.
Not an independent review.
Anybody wants a lesson?
We're certainly open to,
let's
you know,
say,
to
this week on options.
always trying to
Let
do
me know.
better.
And I'm going to be studying futures up, so I can give some lessons on futures too.
Mr. Chairman,
Both
Neil
very,
Rome
very
with
useful
Axios.
tools.
There's been some debate
I'll
lately
explain
on whether
why.
AI is already starting to affect the labor market in terms
It's
of lower
dropped.
labor
We're dropping.
demand, higher productivity by
Dropping.
contrast.
That's
do
the
you-
lower VWAP.
Do you buy that? And
I
if
hope
that
there's
is
a
true,
balance.
does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess but widely shared, I think, is that
This
you
is
are seeing
Tesla.
some effects, but it's not the main
Tesla's
not the
dropping.
main thing driving it. And so
Perfect.
particular focus on young people coming out of college.
Coming
and,
out of the
yeah, there may
closet.
be something there. It may be that
Long
companies
live
or
Charlie
other
Kirk.
institutions that have been hiring younger people right out of college are able to use AI better, more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down, and so it's probably a number of things. But yeah, it's probably a factor. Hard to say how big it is.
How big is it?
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Well, if you can take goods, just sort of the broad goods category, and last year, goods inflation was negative. If you go back 25 years, that was the typical thing. Was that goods inflation was goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic. Of course, goods inflation went very high, but we had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, analysts have different views, but we think it's contributing, 0.3 or 0.4 or something like that to the current core PCE inflation reading, which is 2.9%. So it's contributing.
Much better.
What seems to be happening is that the tariffs are.
You can see on the overall, the negative, the message is more on the negative side, and that's why the SPY is dropping. Good thing I got out, but I got out too soon. But you can see, and it dropped over
between the exporter and the consumer.
since I got in and out,
if you buy
which was
something
about
and
right
you sell
here.
it,
I
sell
just
it
got
for
in too
retail or
soon.
you
I got
use it
in
to make a
perfectly,
product,
but I
you're
got out
probably
too soon.
taking
Didn't know it was
those,
going to
a
go
lot
that
of those
high.
costs on and not able to pass it fully along to the consumer yet. That
Heavily
appears
manipulated
to be
too,
what we're
so
seeing.
it's very hard. There are people who know how to
All
trade
of
options
those
across the
companies
board,
and
where they can be
entities
doing
in the
many
middle, they'll
different
tell you
options
that they
at the
have
same
every
time.
intention of passing that through in
They're
time.
good. They got a lot
but they're
of
not
money.
doing that now. To the consumer,
I've got
the
over $1
pass-through
million
has
in trading
been
on
pretty small.
stocks,
It's
but I
been
only have
slower
about
and later,
34,000
smaller
in
than,
trading on
than we thought.
options.
But the
They
evidence
don't give you
is
that.
very
But the
clear
options
that there's
itself
some
gives you about
I
100 to
also
1
wanted to
leverage.
ask
So you can buy a
if you
$6,000
could share
stock
with us
for
the
$5,
conditions under
$6,
which you
$7
might
a share.
consider leaving the Fed.
You can't beat it. Options are incredible.
I have
Doesn't mean you're
nothing
going to lose
new
more.
on
You just
that
have
for
to
you today.
be able to put in stop losses and do the right thing. And I'm going to start teaching that because I didn't learn how to do it the right way. Unfortunately, Beck did not teach
I
me
just wanted
the
to
right
follow
way.
up
He doesn't
on
use it,
one of
that's
your
why.
answers
He uses
just
mental
a
stop
couple minutes
losses.
ago.
And that can hurt a new
We've
person
often heard you talk
intensely.
about how you
I'm
and your
gonna teach you a better
colleagues,
way in the next
do
few
not
days,
think about politics.
if you're interested
this
in
did
learning.
not enter the room. But one of your new colleagues
Hold on one
does
second.
come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of the forecasts that we see today? I mean, the median for this year was moved
because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
What are they
There's
saying?
12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really. The only way for any voter to really move things around is to be incredibly persuasive, and the only way to do
By
that
having a
in
lot
the
of money.
context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters, and that's how it's going to work. And I think that is the way the institution. That's in the DNA of the institution. That's not going to change.
Can't make this
And
any
then I
louder.
wanted
This
to
is
ask
going
about
louder.
a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for
Absolutely.
the economy. Why do you think that is, and what's your response? What's your message to the public?
Our response is
That
we're
was
going to do
from
everything we
behind?
can to use our
That was
tools to
from
achieve the
behind.
goals
What
that
does that
Congress
mean?
has given us, and we're not going to get distracted by
Yeah,
anything.
it could
So
be.
I think
It
that's
does.
That's
It
what we're going
gets
to do. We're just
slows
gonna
down,
keep doing our job.
unfortunately, because the software that Deck has, and he won't give me the software he has. But I've noticed that he's
Claire
behind
Jones,
also.
Financial Times.
He keeps
given
saying
the
things
range
like,
of views expressed
"Oh,
prior
this
to the
stock's
meeting, I
just
think
about to
there
halt,
was
and
a
it's already
lot
halted."
less dissent
So he's
today
behind.
than a lot of people
I can show you
expected.
how I know.
It'd be good to know just what you
like
think
I'll
the
pull up
drivers
this thing
were
right
of coming
now.
to that very strong
28,
consensus in the
29,
meeting.
30. I just
Also
put my
on the flip
finger up.
side to just explain
Let's see how many
why
seconds.
the dot plots are really
5
so
seconds
scattered
delay.
between someone even expecting
Exactly
rates to
5 seconds.
end up higher by
If
the
I
end of
refresh
the
the
year
page,
to
it'll bring it
5
to
cuts.
4.
I mean, what were the kind of range of views you heard about
Very good
on one
observation.
side why there was so much support for a cut today, and on
5
the flip
seconds.
side why there's so
I'll do it
much
again.
divergence
51
about what comes
to
next?
watching my clock.
So I think there's quite a wide
5. I put my
wide
finger up.
assessment that
2,
the
55.
situation has changed with respect to the labor
4.5
market.
seconds.
Whereas we could still say, and
I don't
did
get
say
better than
in
4.
July, at the time of the July meeting,
Believe
the
me,
labor market
J
was in
trades
solid
used to be
condition,
20,
and we
30
could point
seconds.
to 150,000 jobs
I tried to
per
teach him how to
month
do it, but he wasn't interested.
and many other things.
I taught him how to set
I
up.
think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted, and so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss
see
it with
something
our
really
colleagues.
cool?
We endlessly
We got
discuss
put this
this
back first. Give me a
between
second.
ourselves, and then we have a
Give me
meeting
a
where we put it
second.
all out on the table, and this is what you get.
I gotta
And
be able
you're
to
right.
see.
There's a range of views
What did I do with
in the
it?
dots,
Great.
and I think that's,
Here it is.
like I said, very unsurprising given the quite unusual, historically unusual
Scan it right now.
nature of the challenges that we
Come on.
face.
There it is.
But let's remember though, the
This is what's
unemployment
really
rate is
happening at this
4.3%. The economy's growing at 1.5%.
You
So
don't need the top ones. I'm
it's
going
not
to
a
teach you
bad
how to use
economy
a
or anything
scanner.
like that. We've
What to
seen
look
much
for.
more
Open
challenging
price
economic
up
times.
30.
From a policy
back down.
standpoint,
Right here.
the standpoint of what
Volume
we're
420.
trying to accomplish,
Or you can
it's
do it by
challenging
volume.
to know
Just bring
what to
the
do.
top volumes.
There are, as I
then
mentioned
see where
earlier,
they're
there are no
at.
risk-free paths now.
But I like the
It's not
percentage change.
incredibly
guys.
obvious what to do.
So put the top.
We have to keep our eye on
Like that.
inflation. At the same time, we
Then
cannot
go down and
ignore,
see
we
what's
must
running
keep our
right
eye
now.
on
Like this one here,
maximum
open,
employment,
17.
which is
This one
those
here,
are
what
two
is it?
equal goals.
FOFO.
And you will see
There's one.
that there are just
Here's
there's
another
a
one.
range of views
KPTI.
on what to do. None
I
of us
would look
came
at these
together
two right now and keep an
today
eye on
at the
them.
meeting. And,
Here's another one right here.
Acted with a high
Dingy.
degree of unity.
DNNGY. I don't need to go any further down, but if you watch these, you'll see what's
Thank
coming
you,
up.
Archie Hawke, The Economist.
Co-op.
You mentioned
But don't
earlier
want to
that
look at
job creation
anything
is
or
running
touch
below
anything really
your
that
guess
has
at its
less
break-even
than,
rate.
I
I'd be
forgot
curious
about
to hear a bit more about
that,
that,
less than a
where you
million
think the
shares
break-even rate
being
is.
traded. If it hasn't hit a million
So
shares,
there are
unless it's
many
getting in
different
real
ways
quick,
to
then you can take a
calculate
look
it,
at
and
KPTI.
none of it's
I'm not
perfect,
gonna
but
take this
you know
away.
it's clearly come way down.
here.
You
This
could
is just to
say
see.
it's somewhere between 0 and 50,000, and you'd be
KPTI.
right or wrong. There's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago.
I'll guarantee you, look
it's
this
come
up.
down quite
It probably has
significantly. That's because
a very, very low float, and
lower
it
amount
doesn't
of people
have
are joining
any
the labor force. The
no
labor force
news.
really not growing much at this point, and that's
I'm gonna
that's
look
a
it
lot
up
of
on my
where
side to see.
the supply of labor
I'm
was
wrong,
coming from
QQQ.
over the
Yeah,
last
QQQ is great.
2 or 3
But
years.
if you're
So we're
looking
not
at
getting that.
QQQ,
We're also we've got much lower
is like
demand,
the
and,
SPY.
it's
So QQQ is
interesting,
going down right
that
now.
Supply and
you
demand
have
have really
long
come down
calls,
together
but
so far. Except now we
unless
do
you're
have,
taking quick
inflation,
bites
sorry,
right there,
unemployment
and
ticking
here,
up
and here, and getting in
outside
and out.
just one tick outside of
QQQ
the
actually
range where it's been for a
exceeds
year.
better
4.3%
over long
is still a low
run than
level.
the SPY does. So
But,
where the SPY may grow
you know, I think
this
this
year about
level
over
of
20%,
this speedy decline
QQQ
in
probably
both
grows
supply
over
and demand has
28%
certainly
a year.
gotten
So in
everyone's
the long run, QQQ is a great stock to
you
trade,
mentioned the downside
and
risk
especially
to
because
employment a fair amount, but
QQQ is an option.
striking that
The
measures
fact
the
that you have such
activity now
leverage
for
and
the
it's
quarter
cheaper.
those that we have seen
I think
pretty
what
strong
QQQ is what
GDP now,
$500
it's very
a
strong.
share.
You mentioned
Let's
strong
see, in 500
EC
something a
numbers as
share.
well. How do you
Not the
square
calls,
those
but
things?
the
Is there a
actual
chance actually that the upside
QQQ.
risk
When you
to
do
labor
the
market
options,
is,
of course, it's a
activity
lot
actually
less.
around?
Well, that
I
would be
haven't looked
great.
it up.
We'd love that to happen.
Let me see. I know I'm probably not that far
I
off.
don't know that you see a big tension here, but it's
QQQ.
gratifying to
Okay,
see that
KPTI is in
economic
here.
activity
There's
is
options for
holding, and
KPTI
it's,
right
you know,
now,
so
too.
it's a good
Right, but let me
bit
go
from
QQQ.
consumption. It looks like consumption
QQQ.
was stronger than expected.
Okay,
What we got earlier
is
this week,
data.
I guess. But and
It's
also we're getting
ooh, went up to $600, so
fairly
it's
narrow
up right now.
sector is producing
And the options are only,
a lot of
let's see,
economic activity,
just out of
which
the
is
money
the
would
AI
be
build
so
out
cheap. Look at it. I would go about 19, just out of the money is 50 cents.
You know, we watch
So
all
you're
of
probably
it,
using a
and, I would
601,
say
601 or
we did move
602
up.
option.
The
Am I
median
correct?
for growth for this year actually moved up in the
Can you
S&P
still hear me?
between June and September.
601 or 602? Tell me the
S&P,
option you're
so,
using on the call.
and really the inflation and labor market didn't
If
change
it's
much.
today's
It's really
date.
the risks that we're seeing to the labor
601.
market
Actually, and when it was around
were the
600.
focus of
Fantastic.
today's
See, so
decision.
it's cheap. It's 49 cents. So you got in what, about 30 cents?
Hi, Nicole Goodkind with Barron's. Thank you for taking my question.
Yeah, OGTE.
Given the
1 day till
cumulative
expiration.
impact of high interest rates on the housing
For
sector,
people that don't know what that means, I
I'm
just
wondering
tell them.
how concerned you are that current rate levels are exacerbating housing
I love
affordability
options.
issues
options
and
are
potentially
powerful.
hindering
They really
household
are. They're
formation
powerful
and wealth
tool.
accumulation for a segment of the population?
You know, housing is
But
an
I don't know.
interest-sensitive
QQQ follows
activity.
the SPY.
So it's at the
I don't
very
know how
center
you're doing
of
that great.
monetary
'Cause I don't know
policy.
what time you bought it.
When
What time did you buy
when
the actual
pandemic hit
QQQ?
and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we
1302,
cut
102.
so aggressively,
So you just bought
providing
it.
credit and things like
All right,
that.
so you
they were
bought
able
it
to
right.
finance because
Yeah, that's
we
you
did
should have
that.
bought it here.
The other side of
Let's
that is
see,
when inflation
here,
gets high and we raise
1233.
rates.
You
and
just bought it.
You're right. It
You
does
just bought
burden
it right there.
the housing industry.
So you
and,
got up to here.
so
I would have probably
rates
got out right
have
there,
come down a bit,
and I would
and
wait.
as
Now
that
you got
happens,
it
we
again.
don't
So
set the-
I would
we
get
don't
out
set
pretty
mortgage
soon
rates,
because
but
on
our
the overall
policy
you have to
rate
look,
changes do
and if we
tend to
make a
affect
chart
mortgage
here from
rates.
top to bottom,
And that has been
okay.
happening. And
Let me
that'll,
just
that'll
real
of course
quick. I want to
raise
take out
demand.
this.
Lower borrowing
And I'm gonna
rates
put it in a
for
QQQ.
builders will help, get builders supply.
I'll tell you what. I'll
and
show you
so
how you
some of that
write.
should happen.
I'll show you
I
how
think
you
most
write an
analysts
option.
think that
Okay,
you
watch
have to
this,
be
everybody.
pretty big
This is very
changes for
cool.
it to matter
You put a
lot
dot.
for the big changes in rates
QQQ,
for to matter a lot for the
25,
housing
which is
sector.
the year.
And the other
09,
thing
which
is
is the
by,
month.
by
See, it's
achieving
already starting to
maximum
come up.
employment and price stability,
And
that's
the
a strong
date would
economy, that's a
be,
good
I don't know if it's a
economy
daily.
for
Let's see,
housing.
23rd.
And the
Let's see if
last
it'll come
thing
up.
I'll say is,
If it's not, then
there's
it's
a deeper
Friday.
problem here. There's not a cyclical problem that the Fed can address.
23 is
and it just
okay.
is a pretty
Call.
much nationwide
And then we put in
housing
601.
shortage. Or
So
a
right
lot of
now,
places in the country just
here
don't have
is
enough-
your
enough
option.
housing
Right there.
for
See how you write an option?
and all of the
That's what I teach
areas
you how
around
to. So you don't have to go
metropolitan areas
into
like
the
Washington, for example,
products. I
are
can
very
write my
built
own
up,
options
so
on
you're having
any
to build
stock.
farther and farther out.
All right, it's a
That-
very cool thing. This I just take out.
that's where it is.
This here is the
And
theoretical.
just a quick follow-up.
how to
During the
study.
last
I don't use
SEP,
that.
or the the press conference following the last
Just
SEP,
get
you
rid of
seem
it.
to indicate
Everything you put
that
on there,
policymakers
the
lack
more
conviction
lines you put, the
about
more you slow it
their
down.
projections, and I'm wondering if you still feel that
Come
way.
on, get out. They'll disappear.
You know, forecasting
Okay.
is very difficult
We
even
want
in
to
placid times.
now just move this over.
As I've
here.
mentioned before,
And let's bring it-
forecasters are a humble lot with much to be humble about.
Hold on.
So I think right now is a particularly challenging time,
Okay.
even more uncertain
Let's
than
do
usual.
this.
And so,
and I'll
I
tell
don't
you,
know any
I can look
forecaster
at what you
anywhere
bought and
really
tell you if you did
ask
right or
any
did
of the
wrong.
forecasters
I don't think you
whether
did
they
right,
have
but I think you
great
must be getting in
confidence
and
the
out.
forecast right now. I think they'll honestly say
You had
no.
a couple of good bites before you could have gotten in and out. Like here. That's the
you, Chair
second
Powell.
green.
Jennifer Schonberger with
Second
Yahoo
green right
Finance.
here.
If you're
But you got it at
cutting rates,
1302.
why
Look
continue
below me.
to
There's
reduce the size of your
1305.
balance sheet
You actually
than
got
cause the
in
funding?
on a down.
Well,
And you have a call. So
I think we're cutting the
You
size of our
didn't get
balance
in
sheet
at the
quite
right time.
marginally now.
And
As
it's
you know, with the
dropping now.
balance sheet, we're
Do I got the
we're
right
still
one?
in
10 minutes ago.
abundant
Yeah, I know, but you
reserves
said
condition,
1302.
and we're-
I
we've said
understand.
that we would
I'm looking at the
stop
time
somewhat
below.
above,
Look below here. See, it says
a,
1300. So I go
somewhat
up here
above
and I look at
reserves
1302
level. That's what
right
that's what
there.
we are. And
You
we're-
got in
we're
on a
getting closer
red.
to that. We're
You never
monitoring
should
it
do
very
that.
carefully.
You don't
We don't
buy
think
on a
that that
red
has
when you're going
at
to do a
all
call.
significant,
You want to buy on a green. So you would have
macroeconomic
bought at
effects. These are
1304.
pretty small numbers
So
moving
when
around
you got
inside
up
a
to
giant
here,
economy.
it's
the
about
number- the
56.
level of
That's where you
runoff
should have
is
got
not-
out.
not
So
very
you
large. So I
if you
wouldn't
bought in at
attribute
43, I don't know what you
macroeconomic
bought
consequences to
in
that
at.
this point.
You didn't tell me.
And at his recent confirmation hearing,
But,
Stephen Byron brought
but
up
on the
that
overall,
Fed
if I
actually
draw a
has
trend
3
line,
mandates
we're
from
still going
Congress,
down,
not
down,
just
down. You
jobs
would have been
and
better off
stable
with a put
prices, but also
than a
moderate
call.
long-term
You only
interest
get into a
rates.
call like here.
So
This would have been
what does
perfect.
Congress mean by
QQQ
moderate
at
long-term interest
1213
rates? How should
and
we
dropped out the
understand
first
that
red.
when we
Boom.
see the 10-year Treasury
You would have made a
moving?
fortune right
And
there.
how do you think about this
Okay?
part of the mandate
So
when policy
never buy on a
choices
red
like rate
candle.
cuts or
Don't
balance
ever
sheet
buy a call on a
reductions
red
affect the
candle.
long end of the yield
Always buy on a
curve?
green candle. And you hope for the
So,
second. Like here, you get in right here.
we
When the
always think
second
of it as the
candle
dual
is
mandate,
slightly
maximum
above
employment price
this
stability
candle,
for a
that's
long
where
time,
you get in. That's a
because we
buying
think
signal.
moderate
That tells you
long-term
it's still
interest
with
rates
power
are something
moving
that
up.
will
The
result
first one
from
only tells you
stable
that people were
inflation,
getting out of their
low and
shorts.
stable inflation,
Okay? So they were
and-
shorting,
and
shorting,
maximum
shorting,
employment.
shorting.
So
They sold their
we don't-
shorts.
we
That first
don't
green
have
is
it-
not
we
a
haven't
signal
thought
to
about
buy.
that as
It's a
for
signal that
very
shows
long
you're,
time.
they're
It
selling
has
off the shorts.
a third
The
mandate
second
that
green
requires
shows it's got
independent
strength and it's
action.
starting to
So
move up. And
that's
that's
where
exactly
that
what
is.
it did. But it
And
doesn't always work.
There's no thought of
Because there's so
as
much
far as I'm concerned,
manipulation
there's
in
no
the stock, but
thought
that
of
was a good one right
considering
there.
that,
So truthfully, that would have been the perfect
considering
place
that
to
we
get in at
somehow
1213.
incorporate that in as something
Even
in a
here
different way.
would have been better. 1241 would have put you up here at 83 and getting in. You see the price on the right at 70 you would have made 13 cents.
We recently learned
So if you can get out of this thing, see now you're losing. If you can get out of this thing, you need to get out as soon as it gives up.
Delinquencies are high.
So you're not really in the right
personal loans, credit cards.
location.
How concerned, if
Do you
at
see
all,
that or
are
you don't?
you about the health of
I'll leave that up
consumer
to you.
finances? And do you expect today's
And
cut
if you got
will help?
in at 1302,
So,
let's
we're
say
aware of that.
1301,
I think default rates
1302,
have
you
been,
got
kind
in
of
approximately at
ticking up,
50
and
cents.
We do watch that. They're not at a level. I don't believe
1302.
they're at a level where overall.
Is that
they're-
Eastern
they're,
Standard Time on your
terribly
clock?
Concerning, but it is
Are
something
you
that we
Eastern
watch.
Standard Time?
Lower
Because you
rates
might be giving me a
should
different
support
time.
economic activity. I don't know that one rate cut will have, a visible effect on that. But
Rieswagen,
over time,
are you here?
A strong economy with a strong labor market is what we're aiming for, and
He's still here.
stable prices. So
You're not
that should
answering
help.
me.
But this rate cut is coming at a time when the stock market
You should have been short.
is at or near all-time highs, and some valuation metrics
Yeah,
are
Easton.
elevated.
So you got in around 50 cents,
Is there a
didn't you?
risk that
48 to
cutting
50
rates
cents.
could overheat
And right
financial
now,
markets,
it's
potentially fueling a bubble?
sorry. Have your screen
we,
full
we're
screen to see the
tightly
short.
focused on our goals, right? And
I
our goals are maximum employment and
have
price
my
stability. And
stop
so
loss
we
at
take the
440.
actions that we take
440.
with
Well,
an eye
you're at
on the- on
430
those
now.
goals.
Oh, 43.
separately.
At
And
43.
that's why we did
So
what we did
you
today.
got stomped
Separately,
out.
We monitor
You already got
financial
stomped out.
stability very, very
You're at
carefully.
40 now.
And I
Right,
would
so
say
you got
it's,
you got
it's a
stepped
mixed
out.
picture, but households are in good shape. Banks are in good shape. Overall, households are still in good shape in the aggregate. And I know
You went
that
the wrong
people at the lower
direction.
end of the income spectrum are
QQQ
under pressure,
goes with the
obviously,
SPY.
but, from
And
a
right
financial
now, you
stability
can only do
perspective,
it
we
if like you
monitor
get
that
in and get
picture.
out quick.
We
when
don't
it
have a
goes
view
up,
that there's a right
like I
or
did.
wrong level
I made a
of asset
quick
prices for
40. I
particular
made me a
particular
quick
financial asset,
20 cents.
but we monitor the whole.
And then I got out
the
and went up
whole
another 40
picture.
cents.
Really
I told you
looking
it
for
went up
structural
to, let's see, I can look at the,
and I would say those are
I
not
can look at the
elevated.
one I got in. I got in SPX, and it says I got in a call on
Hi, Chair Powell,
66.90
Jean Young,
at
M&I
290, and I got out at
I wanted
320.
to ask
So I made
about
30 cents
inflation
real quick.
expectations.
I got out at 320 and it went up
You've
to
said the
360.
Fed can't take the
So there was
stability
another 40
of
cents I
inflation
could have made.
expectations for granted. You
Quick
mentioned
money.
that the short
Quick
run
money.
they've
That's
gone
it.
up a little
This is
bit.
not
I
something
wonder
to
if you can
hold.
talk a bit about that. And then also at the long run,
Tesla's
wondering,
going up.
do you
Look at
see
Tesla.
evidence that the debate
Tesla was a
over
good buy.
Fed independence
Right there on
and
the
the growing
bottom.
deficit
See, second green,
is putting
right
pressure
there.
on
Boom.
inflation expectations.
433, 39. We're at 35. It went up $2.
As you said,
Boom.
shorter-term inflation
It was your money.
expectations have tended to respond to near-term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little
Look
while
at
to get
that,
back
huh?
down. Fortunately,
Tesla went for a
throughout
ride.
this period, longer-term inflation expectations both break even in the markets, and almost all of the longer-term surveys,
But if I draw
Michigan
a
being a bit
trend
of an
line
outlier
for
lately,
this, it's still a downward flash.
have been just rock
Gotta be
solid.
very careful.
In terms of running at levels that are consistent with 2% inflation over time. So we don't take
See,
that for
you can
granted.
see it. If you
we,
look at
we
this,
actually assume that
you can almost
our
fit it
actions
right
have a
in
real
here.
effect on
See?
that,
Look at
and
this.
that,
One,
we need to
same thing.
continually
One,
show
two,
and also
same little
mention,
zigzag.
discuss
It's identical.
our commitment to
It's just
2%
laid out a
inflation.
little wider,
And so
but
you'll
it's
hear us doing
identical
that.
to the SPY.
But,
SPX.
yeah, we're, as I mentioned, it's a
QQQ.
difficult situation.
Yeah, we
because
also have
we
SQQQ,
have risks
which goes
that
the
are
other
both
way.
affecting the labor market
That's what you should
and
have. Well, it
inflation.
wouldn't matter.
Those are two
We got
goals, and so we have to
SQQQ,
balance those
QQQ,
two. When they're both at
and
risk,
what
we
is
have to
it,
balance them, and that's really what we're
TQQQ?
trying
I'm
to
not
do.
sure there's a bunch of them. You see,
I
it's
know
still
your
going down.
Your latter part of your
Sorry.
question was about
Was not a good bet for you.
independence. I don't see
I know you're
market
out.
participants. I
But
don't
the
see
smart
that's
thing is
something
that you
they're factoring
did
in
have a
right now in
stop
terms of
loss.
setting.
How many contracts did you have? One?
Thanks very much.
It does bounce. It might bounce after you get out. Watch it go back up. How many contracts did you have? One? I trade 4 at a time. 5. That's what I used to trade, so I went to 4. All right, that's the end of this. We can get rid of that. Fed's over. Gone. All right, I was watching QQQ, so I'm going to put this back now to... But you learned how to NVDA. You learned, might get back in here though. Yeah, it might go up, but I was just saying, wait for the second green. When the second green is above the first, okay? If you do that, most of the times you won't get burned. Hold on. Come on. But you see how to write the contract? You can go up to the top. Like most of the contracts I keep, I try to keep them between a 250 and a 350 area, regardless of where the delta's at, and it always works out. I always get paid fine. It's a little trick I learned. I taught myself. Just watch this. Whatever this does, there's your second green right there. Yeah, there's your second green. Do you ever feel like when you get in, it goes the other way every time for a second, like they're watching you? Are they watching you? Are they watching me? So weird. Second green and it's not moving. Be careful. If you see a second green and it's got a high shadow, that high shadow is called a doji. Depending on which direction the doji is facing means a reversal. There's no doji right now. It disappeared. But a doji going up means it's going to come back down. A doji going down usually means it's going to come back up. Where can I show you an example? Right here. You see this doji right there? Take a look. See the doji going down right there? It went up. But now you have a double doji going up. It came down, down, up. Okay? So you're getting movement, but a lot of manipulation also, especially with the SPY. And if the SPY is being totally manipulated, the reflection is going to be on QQQ and TQQQ because they follow pretty much at a different price. I mean, you can get a better moving QQQ at a cheaper price than you can get SPX, which would be equivalent to doing the QQQ, but at a little higher. I use SPX. But QQQ is great. In long term, it's in the long run, QQQ outperforms, believe it or not, the SPY. You know that, right? Or you do now. All right. It is 1:23. I did one trade this morning. I did a trade this morning twice. Schwab didn't allow me. I went to get in FTEL this morning at $12. And it 11.55 twice, 11.55, and it went up both times to 14 something. I could have made $600. I'm sorry, $600 this morning. I was buying 200 shares. It went up $3, and I couldn't get in. And then when I was up there at 14 something, he asked me if he wanted to buy me into shorts, because they said there was 173,000 shorts on FTEL, and truthfully, that was a great buy. I should have said yes. I got pissed and said no, and it ended up going down to $8. So you could have made a lot of money on the shorts. It was HTB, which means hard to borrow. If you look in the watch list, I have right here. See the HTB? HTB. So you look at FTEL. See, say HTB. If you think you want to short it, go for it and try. Don't even worry about if you have Thinkorswim what Schwab charges, because regardless of what they ever charge, it's nothing compared to what others are charging. The big deal is you only get to use them once. There's no guarantee you'll get them twice. So make them count. Don't get scared. When you have a stock like FTEL that was pumped up, I mean, it was only talking about a split. There really wasn't really much, and a loan of some sort. So they're really, you knew it was going to come back down, especially since it started out so small this morning. I think at about $1 or something like that. Whatever it was really low. But they found it to be, what did he tell me? They were afraid that a lot of people were going to get burnt on it, so they wouldn't allow you to buy it. They did in the beginning, and then they stopped it. And just as I got in, Deck announced it, and I was in it within 30 seconds. I was hitting the button, and it wouldn't let me in. That would have been a great deal, because I lost 800 yesterday. But luckily enough, I have a very large account right now. I got option buying power over 34. And my day trading power is 1,098,000 right now, so it's pretty high. And I got net liquid day trades of 279,000, so it's never gonna. I can trade all I want, but the SPY's going down. It still is, and that's why I said what you need to do. Let's take a look at something, and let's go into the SPY. And that's why when you decide to go into QQQ and go long, the reason that you, I don't know if he's still here, because I can't see the room. I can't see everything at the same time. What you do is you just draw a trend line. So from here to here, you go down, 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 down. Your trend line would go, yeah, I'll show you what it looks like. Your trend line would go from here, because you can't reach a high point. So from here to here, and you see what direction we're going? Down, down, down. So when you look at that, and let's say look at the other side, let's put, where am I going? Here. Okay. No, that's the wrong one. I didn't mean to do that. It should be this one. Okay. Then when you pull this up, you'll see you're going to go from here to here. So you got a parallel, but this is going down, and that. This goes to here now. This is where we come in with the active step. Remember, I used to teach the active step? Some of you might remember. So that active step would come from here, watch, boom, now to here. So what I would do is I would come in here, and I would cancel out the left, and then I would cancel the right here. Ready? Cancel the right, and now you can see the active step. And look at the drop. Look at this drop, folks. You should have being puts right now. That's what I told you. You should do a put for QQQ. If you'd listened to me before, look where you'd be right now. And I don't even need this top one anymore. I can take this away. You see? I no longer need this, but I was doing it to show you the active step. I hope that helps people out here. There you go. So your resistance, it's not exact, but it's probably lower. It's about right here. Where the support is now the resistance. So you take this down to here. That would have been a lot of money just now on a put. I should have been in a put. I thought it was going to hold 65. So it just went down from 665 to $1.25. 400 shares, that would have been about $500. I told you to do it, and I didn't do it. Let me take this off. I'm sorry, you must be getting some feedback. All right? And when I go into anywhere else, when I go back, watch, you'll see the lines are already in there. Anywhere there's a SPY, it'll be there. I think it's still going to drop, but it's going to go up and down a little. Yeah, that was some drop. Look at that. It went from $350 to $780 on my contract. That was about $4. So $4, I had 400 that would have been $1,600 just now. Unfreaking real. Unreal. Let's take this down to, oh shoot, I lost my contract. Come on. I lost it. I lost my contract. Okay, star SPXW2509. Today's the 23rd. That's a put. And he's coming back. It'll be 64. Let's see what we got. 64. 6,400 is no good. 6,500. I gotta figure it out. 65. Come on. 65. Here we go. That's $1.75. 65. Let's go 70. Let's see what that brings. Still no good. 65. Let's go to 66. What's that one on? 66. All right, 66. Here we go. Oh shit, I missed it. That's $32. That's too much. All right, let's go down to 50. 66.50 will bring me to, here it is, 340. 66.50 contract. It's $3.20. It's at 310 right now. Which way are we going? There it goes, going down. I just don't want to see it bounce on me. I'm taking a chance. Come on. I'm taking a chance. I'm losing. Come on. Come on. Drop. There we go. Oh, I had it. I missed it. I missed it. Oh, I had 40 cents. I missed it. All right, I got out. Let's see. I got out at 40. I made 20 cents. So I'm up to 100. And oh, I missed it. That was the big one. Oh, my God. All right. I could stay longer because it's going to drop. There it goes. I should have just stayed. It hit 360. I didn't even see it. Like 40 cents. Boom. That was nice. That was just a quickie. I was in and out. Quick trade. I'm just trying to put some money in the account. That's all. Now it is 370, 380. I really should have stayed because it is dropping. You should be in puts right now, folks. Be in a put. Put it where it belongs. This was a perfect contract that I just picked up, and it moved nicely. I told you, I try to get it in about a $3 area. But if you have a small account, you may want to go a little further out. That's all. Go to $2 and change. See, now it's back to $3. So exactly where I bought it. It's going up a little. Let's see if this is the bounce. I don't think so. I really don't think so. I think it's going to drop. I do. Unless there's news. 1325. That's at 125. That's the only news. So there's no news. So it's going up a little. This is going to be a good buy at any second. At 290, that's a 66.50 contract put for today. Right now would have been great. Hey, there it goes. There it goes. I should have bought it. I'd be up right now another 25 cents. Unbelievable. Watch it drop. We'll see. It's fighting to go back up. It is fighting. We'll have to see. That was exciting. Boy. I turned around for a second. It went boom. It was drop, and it went boom. And I didn't get out. I got out, but not where I wanted to. I wanted to get out at 360. Okay. You guys see me okay? I can't always see you because I lost one of my computers. So I don't have that extra computer I can't see. I have to be somewhere else, like where I buy. But it seems to be holding, which is great. Might get back in here, though. Well, that was a good shot for the call. There's the bounce. Where's the beef? There's the bounce. 663.45 right there. Just where I put it. There's your support. Let's see if it holds. Watch this in here. This will tell you. You got down, down, down. You got it's trying to climb, but we're still going down. This might drop really quick. You got to be careful. You could get clipped. I know you want it to go back up, but the fact is, will it? Or are they just manipulating it? There it is. There's your red. There's your red. There's no second green. Don't do it. Let's see. Is he still live? Deck? He never came back. Hold on. Active trader is still live. Trading live. There it goes. Just like I said. It's going to go back down. There it back to 310. 320. Come on. Watch the fast drop. It's coming right now. 330. Watch. It's going to go to 40 on this contract. It's going to go to $4. I'm not in it. Watch it go. There's 50. 40. There's 30. It's hovering, but it's going to drop. 50. Ready? Ready? It's going to drop real quick. Any second, it's just going to drop. Let's take a quick look at FinViz and see what the day looks like. You really should use FinViz, and you should go in there. Right now, everything's red. Okay, everything. We're down on the Nasdaq. S&P's down 3250, 60. Nasdaq's down 160, and the Dow's down almost 92. So you got to keep an eye on that. If you don't have this saved or bookmarked, okay, I have a bookmark. I just clicked on it. Use this right here. That's FinViz. There you go, folks. There's the drop, as Active Trader said. Here it comes. Oh my God, I wasn't in it. Oh, what an idiot. Oh, that was the good one. That just ran $1.50, $1.60. There it goes. Are you listening to me? $1.08. Oh my! Oh, I feel so stupid. Look at the drop. Oh, I'm crying. I'm crying. Now I'm going to change contracts. Now I'm going to go back out of my way and make that a 66.45. I'm going to just go down 5 cents on the contract. That brings it now to 370. That other contract just went to 530, folks. It is dropping. Oh, I don't want to chase this. I don't want to chase this. But the markets are dropping. Oh my God, look at this. Okay. I just got in and out again because I'm not take any chances. I got in. It's 410. Ooh, nice. 450. I'm up 320 now. Just in the last, I only started trading at 1240. I did 1, 2, 3, 4 small trades, and I'm up 320. That puts my day positive. I'm great. Oh, that was beautiful. Oh, I called this, man. I hope you're listening, Wagon. Reese Wagon, I hope you did what I said. If he's still here. Yeah, he's still here. That was a great call. I'm usually right, especially when I don't get in, like the last one. It went $1.80 and I missed it. It went to $5. It went like almost $2. Oh my God, we're dropping. It's going to come up and down, and nothing goes straight down, folks. But there it goes again. Here it comes one more time. What do we got? Just watch this here. 90, 90, 90. If it drops below 90, get in. It's going down. There it is. There it is. Here it comes. Here it comes. You see? And now we'll have another active step going down. You can see it. You can see it. Until it pulls another direction, we're still down. So now you go from here. That was the point from before. And leave it right in front of the 13 exponential. Right there. See the exponential? Leave it right on top. Then you just watch this. Cancel the left. And this one here, you want to cancel the right. And these are the active steps. I named them after me, the active trader. So we had the first one, then the second one, now the third one. Okay? Active steps. You can see we're still coming down. I don't need this one anymore right here. Not until we come back up above it. And so for right now I can get rid of it. But it shows you can start to see what's happening. I don't even need a bottom one, because if I made it from anywhere, I make it from a bottom here and bring it, it's still going to show me down, down, down. We've got I can go from anywhere. Okay? I can go from here to here. Let's say like that. So you see, and then I got to just keep moving it, moving it, moving it. That's why I don't want to put it there. Let's just get rid of it. It's gone. Good. It didn't complete it. We're still going down. Watch this here. As long as we don't... There it goes. 85. I told you we're going to drop. There it goes. Be in the put, folks. Be in the put. Oh, my God. Look at the call. It's down to 50 cents. And pretty soon, these calls got to be careful. What I do at 2 o'clock, I change the date on the contract till tomorrow, so I don't get caught up in today's contract to nothing. All right, and then I go tomorrow's, and then I take it and I change it till it hits about $2.50 to $3, and it always works. It always works. Let's see what I can do here. See if I can make. I got to change this one. I'm gonna take this off. There it goes. Look at that, 510 now. That contract, 510. 510. Let's put this to 60. Oh, what do we got? 666. I don't like that. That's like the devil. All right, there we go. Ooh, that's 580. That's too much. Let's go to 65. Okay, on the call, I've got 5665. That puts me 375. The put now, I'm going to go down a little further. I had 6645, but it's at 550 now. And I got out at what? 4 something? I'm going to make this now. Let's go to 60. I want it to open, so it'll show me the contracts. All right, this one here, this is still too high. I'm going to go to a 35, a 6635, today's contract. 6635 should be about 2 something. Let's see. 310, perfect. 310. I try to keep it in that area. It works every time. Now it just went to 340, 350 from 310. It's dropping. I'm excited. Who's making money? You should all be making money. I'm giving you the best hits to take. Don't worry about what I do. I'm here to call them for you. I jump in and out. I should just stay still. But I just know when it changes out and I'm not watching, it'll do it fast, and then I'll get nervous. I'm not the best trader. I'm the best person to teach people how to trade. Look at, oh my God, look at Tesla dropping like a bomb. I had Tesla contract right in front of me too. That one's up to 486 from 2 something. But I tell you what, the SPY is moving much better, paying much better. Okay, there we go. I'm just doing these by eye. Oh my God, there it goes, there it goes. I can't stop it. I can't stop it. I can't move it. Come on. All right, let's put that there. I always try to leave it like $1.25. So for right now, let's put 424.70. 424. This is money, folks. What is going on? Does anybody know what's going on or why? 424.70 becomes 425.95. 425.95. That's $1.25. Works every time. There you go, right there. Take my word. Oh, it went up further. Look at that. It just jumped. That's what I was afraid of, because those will get you. Now it's a good time to get in to go down. It's not going up. I do not think it's going up. 1326, there's no news. Watch the news. So even when it does this, it's manipulation, because nothing goes up and down. People run out of shares, so they need to sell off to come back. So wait for it, and then jump in. Going down. I do not think we're going to go back up yet. Now, I could be wrong, but I don't think so. Down 70, 26. I'm just going to where it went. Okay. Yeah, let's bring this down. This should be down to the 13 exponential. Right about there, right? See the blue? That's a 13 exponential. That should be your resistance right there. Same thing here. See the right there, the blue? That's your 13 exponential. I used to use that as all the time, and you'll see it works. It might go slightly above it, but I don't think we're going up yet. I still don't. I can't see the room, unfortunately. I got to get this other computer fixed. My hard drive died, and all my information's on it. I got a guy in California, says he can fix it. I got to ship it to him. I should overnight it to him. He's a friend of a friend in the room here. I need that second computer. Fix this tab. Still 7 people in here. How's everybody else doing? Anybody make some money? Trying to make up for yesterday, because I lost 800 yesterday. My own fault. I chased something the wrong way, and I was stupid because I knew what I was doing. But obviously, I got caught up. Okay. None of you talking to me. Here we go, back down again. I should jump in 3:30. If I did, let's see what happens. 3:30. Right now, boom, 3:30. Let's see what happened. I didn't do it. There's a 20-cent spread. Now there's 10 cents. 3:20, 3:30. Now there's only a 10-cent spread. Come on. What's it going to do? I'm not ready yet. I don't know if it's bounced yet. Did you see this? Right there. Before, down here, it was at 662 and what? 662 and 16. See this? We're holding on the 50. It means it's going to drop. Look at, there it goes. There's the 50. I could have gone at 30. Now it's at 40. Now it's at 50. I should have taken it. It's going to go. Watch it go. Boom. About $1. It's fighting to stay up there. Okay? But it's not going to. Here's your, you'll see. Anything green is, either, well, it could be getting out of shorts too. Remember, that's a stock, not an option. You can make more money shorting a stock than you can going long most of the time. I'll leave that on for a second so you can watch. Green is either getting out of the shorts because they're getting scared, so they're selling off the shorts, but the next time you see a second green, then we know it's going up. If we don't, and it goes red, then it's probably going down. But right now, be careful. If this goes over to 663, be careful. And I would not keep going both ways. Go up, go down, go up. In the end, you're going to lose. It's a chase, and it never works. I've tried, and I'm pretty good at it. I lost a lot of money doing that. Pick a direction and stick with it. Make sure you get out and don't sit and hold too long. Move this up here for me. There we go. Move this up. There it comes. Like I said, if it drops below that 40, it's going down. Take a look. It's trying to hold. It is fighting. The Bears and the Bulls are having it out right now. Who's going to win? Who's going to win? All right, my contract is about right. It's still at 320. I'd still be fine. I've been up a couple times. I've been down a couple times. Yeah, I'm down a little. Down. Let's see. I think I need to watch the room too. I can't see. I need another. I can't believe this. I could take. Then I can't. Oh, I can't. You can make a. I know there's a way to take the chat and separate it. Let's see. How do you do it? Pin. What's the pin? I don't want to hit anything. I'll lose you guys altogether. I'll never get it. There's a way to take the chat room and move it around. You can have a moving chat room. I can't see. I need those extra 2 monitors. I got 2 monitors here, and I got no computer to set it up to. And I can't set it to the laptop. I don't have any more spaces. This really, really is killing me. And even if I did, it would slow me down too much. This computer's getting too old. It's a 17 and a third, 17.3 inch Hewlett Packard, but it's an older one. It's 2018. I'm gonna get a new one for about $700. It's one good deal, one good trade. Get a new computer. I have the money. It's not the money. Just doing it. I can't believe in Deck's room there's so many people in there right now, and they'd rather just sit there. There's 900 people in there right now, and he's not live, and they're playing tapes. Well,
people dancing and living it up because they have set themselves up for success.
What do you call it? He's playing a tape. I'll put that back. I need to leave my volume on a little bit so I can hear when I buy. I can hear when it goes. I don't know when it's. See, I have another one that shows me when I bought. I can't even put it up there. It sucks. Oh, there it goes. Oh, did that take off? Look at that. This thing just went from $3 to $4.90 on the call. Oh, down to $1.35. Be careful here. Be careful. We're going to take this now. We're going to move this to right there. Right there. And then we'll take this. I'm going to move it up a little bit. 663 went over. 45. I always leave it at 45. All right, right there. 666, 45, right there. Let's see if it holds that area. Wow. That one, woof. I did not see that coming. Let's make that, let's see what comes up. I gotta change the contracts now. 50 would be 45. 45 on the put. 66.45. Perfect. 66.45. And the call, which is now at 450, I'm going to just bring out another 5, make it 70. That should do it. And that brings to 330. I try to keep it in that $3 area. 250 to 350. If I do that, it always works perfect. So all you got to do is change 2 numbers until you get what you want. What you don't know is, I buy from, I'll show you what it looks like. I have a page called the 6-in-1, okay? And I can give anybody I want my setup. See, this is 6-in-1. They got the SPY and Tesla, and then they got the contracts. You see, it's checked, ready to go. This one I unchecked. Now, every time I move it, I have to bring them in here. You see, I just have to adjust it. But you see, 310, 320, 260, 270. All I do is change the number in here. So if I change this number here, and I want to make it, let's say, a little more expensive, I just take this to 50. Watch what happens. And it'll become 3-something. See, 380, 390. But I want it a little bit cheaper. I just did that to show you how I'm doing it. So 45, let's say, back to 280, 285. And then I got Tesla over here, which is that I keep these to $2-3 range somewhere. My account's pretty big. You can make it cheaper. That'll put you further out of the money. All right. I'm just showing you what I'm doing, and I have something else to the left that doesn't come with me. All right. So this is my 6-in-1. I have other setups that I've made for option trading where everything has. I can put this in it, so I can have one of these. I can have a time and sales, so you can buy right from time and sales. Okay. So it's too much for this. Not time and sales. Active trader. I'm sorry. You can buy from anywhere with these, but you can buy from an active trader. Okay. So you can pick the price you want and go down and up until you see the other people what was sold. It tells you how many shares were already bought and sold, and it just came up for a second. Yeah, I'm not saying it. 429. Let's see where it's at. Because it's too small for this area. I'd have to really open it up. So I have what's called a 4-in-1 page, but this is no good. I want this, the active trader, so I can put an individual stock in it, and I have them set up that way that I can do that. And you can buy from the active trader. A lot of people buy from the active trader. It's great. It's a great way to trade. All right, here we go. You see, it went up, it raced up there, and now I'm telling you, I believe it's going to come back down. See if I'm right. Nothing goes straight up, and this is all manipulation right now. Right there. The same thing, I got it there. I'm taking this out because I really don't need this anymore. I like less lines. The less you have on a board, the less it slows you down. So 340 and 245. The call should be a little higher. So I'm going to make the call 65. That should make it a little more expensive. Oh, that's already $5. That's no good. $3.95. Perfect. All right. Because that's going to go down as it go down. It's going to go down. This is going to go up. The put. I still think, watch this, if this stops to drop behind, I might jump in again. There it is. There it is. I told you guys. It's already at 410. I don't want that. I don't want that. I want it at 40. I want it less. I don't want the delta too quick, just in case it snaps back on me. Oh, it's 245, 245. It's a little cheap. I don't know yet what I want to do. I just have a feeling it's coming back down. Who else feels the same way? That it's going to come down, not up? Anybody? Or I'm just talking to myself? I'll say goodbye. If somebody doesn't talk to me, I'm in the wrong room. That's Deck's room. If somebody doesn't talk to me, I'm going to leave. Anybody there? Then I'm leaving at 2 o'clock. So you guys will have a great rest of your day, and I'm going to go do my thing. Well, I don't have to worry about you. Any participation. All right, I am leaving. Y Trader, Race Wagon, Trader Back, J Beans, G Wright. If you haven't joined, please join, resubscribe. Like I said, Deck took my L1 down. And as long as nobody's talking to me and there's no participation, I'm going to leave early. I'm just going to trade on my own. 250, 260. Come on, still not moving yet. Still not going. 194. Let's see. So Tesla put. I'm going to make 412.50. That's for Fridays. 412.50. Oh shoot, I don't want that. 412.50. Didn't go in. 412.50. There it is. 330. That's good. That's not bad. Let's try 4. It would be 410 then. It'd be too low. And this one here is $1.84. So I'm going to take this one and just make it 50. So I got 450. Still so high. It's probably low on the Delta for Tesla. 450 for this Friday on the call. A 450. Anybody looking to play trading Tesla? It's really a pity that you guys don't talk to me. There you go. Are you doing this on a different screen? Are you doing this? What do you mean doing this? Yes, I am. And I got to keep going back and forth until I fix my computer. That's the problem. That's why I haven't been streaming as much. I cannot watch. So if I'm going to trade myself, and I can't keep going back and forth, I'm going to, because I don't have the extra monitors. I can't see you. The good thing is it's not dropping off. So many times it drops off on me. It's perfect. But I got to refresh it right now real quick, and this should bring it totally up to date. I'll show you what I mean. It should bring it to 4 seconds. There we go. Refreshed. And if I bring my time up now, 6, 7, 8, 9. Okay. 9 seconds. 10, 11, 12, 13. 9 and 4 is 13. 4 seconds. So it's 4-second delay. That's the best I can get. Unless without getting other software that I'm not paying for. And there's no reason for me to pay for it because you guys don't pay me and neither does Deck. So you can understand. I'm not paying for that. I've asked him for the software and he won't give it to me. I've been here over 6 years. Taking care of and got his back, and he's like, he doesn't always have mine. He says he does, but he doesn't. And that's a pity, because I really do have his back. Okay. I'm trading on a different screen. I have to bring up Thinkorswim, and then it blocks my room. Still fighting to go up, folks. Still fighting. 420 on the call. So I'm going to make this now back to 70. Back to a 70 contract, because I missed it. That's 240. See, one is too cheap and the other is too much. I'm trying to find it. Hi, baby girl. Hold on. Go ahead up. Go up. Go up, baby girl. Talking to my cat. Come on. There you go. Okay. My cat's on the bed. She's getting old, so I need to make it easier on her. One of my favorite songs. Seen God's eyes, but I've seen the devil's. He walks on men on earth. At every level, he knows the king we serve. And he hates and meddles. He means we all burn and turn to rebels. You gotta get in my heart, or I never settle. What the grill me rode, from the bird to the ghettos. I am the gift they stowed, and return a vessel. I am the one they chose. Yeah, yeah, yeah. I can listen to that all day long. It's Christian music. Ouch. Poke myself in it.
Incoming call from AJ Graziano.
I'll be right back, folks. What's going on?
Powell's talking?
What's that? He already spoke. Already spoke.
What?
Already spoke.